Welcome investors! Today we'll be talking about prices of gold mining stocks going down. This video is inspired by a comment made by JT, who is worried that his Yamana Gold and Kinross Gold shares lost between 30 and 40%. It happens that I also own shares of Yamana Gold and Kinross Gold, but I didn't even notice that they were going down recently until I read JT's comment. I don't follow the market very closely. That's why I didn't see gold stocks going down. In the end of this video, I'll show you my Yamana Gold and Kinross Gold shares. So if you are interested, keep watching and don't go anywhere. Let's start with S&P 500, which for past year gained 70%. This huge rally for past year in stocks sucked up around 30-40% of the value from gold producers like Yamana and Kinross Gold starting in September 2020 until now. You have to understand that if there is a strong rally in stocks, then usually physical gold and gold mining stocks are suffering because investors are chasing bigger returns and they are liquidating commodities like gold, silver and uranium. Yes, uranium stocks are going down as well. If you look at the chart of Cameco or Energy Fuels, you will see them going down recently. The charts of uranium stocks look a little different than gold mining stocks. There is a really sharp increase and sharper decline because uranium is more volatile and I would say more a speculative commodity than gold. But you can see a similar pattern. There is a retreat coming into the commodities. The question you're asking yourself right now is why there is a retreat in commodities like gold, silver and uranium. Because it is impossible to have a very strong rally in general stocks and at the same time have a very strong rally in commodities at the same time. As you noticed, gold mining stocks were increasing in value from March 2020 until August 2020. Then they started falling. Simply investors started pulling the money from commodities and redirected them into the general stocks. Money has to come from somewhere in order to fuel the rally in general stocks. But last Thursday, it looks like the stock rally is about to end because interest rates for 10 years treasury bonds hit 1.6%, which is higher than S&P 500 index companies are paying for the past 12 months, which was 1.4%. It looks like more money is going to flow into the bond market in the near future. Why did the yield on bonds increase at all? Because not enough bonds were being sold and prices of them were discounted in order to attract the buyers, which caused the yield on the bonds to spike starting from September 2020. If those trends continue and yield goes farther up, then we will see more money floating from the stocks into the bond market and into the commodities, especially gold. But this doesn't necessarily have to happen. And we can have just a temporary spike in a treasury dividend yield and further decline of gold prices and gold mining stock prices, which is great because this will give you a chance to load up more gold mining stocks at the deep discount. in the future we'll have much higher dividend yield for treasuries coming because the government is spending massively, and this will push interest rates much higher, and Fed won't be able to control them so easily. This is a trend you should be looking for, not a temporary drop in the prices of gold and other commodities. When inflation starts kicking in, we will see money starts floating back into the gold market because gold is considered a hedge against inflation. Investors will look for a safe haven against the fiat currencies. So JT, at the end of the day, don't worry about the temporary drop in the prices of Yamana gold and Kinross gold. Those are very good mining companies and they are not going anywhere. And further they drop, the better price you can get when you buy more shares. Look at the long term, not temporary moves in the market. And the long-term trend for gold is very positive. That's why I personally don't follow the market closely, because it can deceive you and you can get the wrong message. If you stay too close to the fireplace, you are going to get burned. In order to benefit from the fireplace, you have to have a certain distance to get warmer and benefit from the heat. Exactly the same principles apply to the stock market. If you are too close, you are going to get burned and you will not be able to benefit from the stock market.
Let's take a look at my Kinross Gold shares, which I started buying in May and June 2019. Total, I invested 59,926 and 25 cents. And as of today, which is March 2nd, the shares are worth 103,284 and 17 cents. So this gives me 72% return on investments. And if I look into the past, 6 months ago, my Kinross Gold shares were 154% up. So obviously, shares went down. But I'm not worried because this is a long-term investment and I'm waiting, like I said earlier, for inflation to start coming in and eventually investors will come back to the gold market. And here you can see the shares of Yamana Gold. So Yamana Gold, I started buying in May, June, and July 2019. Total, I invested 41,616 and 52 cents. As of right now, the shares are worth $75,073.93, which gives me 82% return on investments. And again, 6 months ago, if you look at my video from 6 months ago about Yamana, my shares were up 190%. They went down. But I'm not worried, and JT, don't worry as well, as long as you are able to keep these shares for the longer term and you don't need this money. Because investing in gold stocks is very volatile and it really requires strong mind, especially right now when the prices of shares, like you mentioned, went 30-40%. So a lot of investors are going to liquidate, but you have to be strong and hold on to your shares until they really go up in the future, and they will eventually.
Okay, that's it for today. I would love to hear from you. Please write me down your comments, positive or negative or welcome. Just remember to explain your opinion. And remember, this video is just a motivation for further study. I am very simple investor, and this what you just heard is supposed to help you to study, not make decisions. Do not make any decisions based on this video. And if you like this video, hit the thumb up, subscribe to the channel, share this video with your friends on Facebook, Twitter. I highly appreciate all your help with building this channel. And in the end, in the description to this video, you will find 2 books. These books are really great if you are thinking seriously about investing. Reading books, when you read books, you are memorizing, you're learning. When you watch videos like this, pure entertainment. Tomorrow you're not going to remember anything. So remember, reading the books is the way to go if you really want to learn how to invest. Thank you again for watching this video. I really appreciate your time spent with me today. Have a great day!